What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. In today's show, we're going to have my very good friend and fantastic day trader, Brad Jelnick, on. Brad will talk to us about his process and journey for developing his edge. And on my final thoughts, I'm going to talk about the 10-year today. It's back on my radar. And some things I'm seeing in the E-mini S&P and E-mini NASDAQ. But before we get Brad in the line, it's August already, everybody. Coming August 31st, the Micro E-mini options. I put a link right there for you to click on. It'll take you to this page and subscribe for updates. All right, traders, hang tight while we get Brad on the line. Brad, what's up, my friend?
Hey, Anthony. I'm good. How are you doing?
Doing good, man. It's so great to have you on the show.
Good.
You've been on the podcast before, and we met later in our careers. You and I, we've been traders for pretty much right around the same amount of time. It's hard to believe it's been 20 plus years, I think, for both of us right now. And we met later in our careers, and you and I just clicked. It was funny. There was like a group of us that met. A lot of the guys that were at the prop place that you were at, and we all got together and talking about trading. But you and I connected probably more than all of the other guys. And what was so interesting is about meeting you is that I learned so much from you, and we had so much in common. But something that was very different between the two of us was really our edges. It was weird because we were so similar in like the way we approached our trading business, but our edges were really different. Talk to us about you and your journey in developing your edge.
Yeah, I think the journey always continues and it evolves over time. But so I started out of college trading futures during the day. And at that point, my goal was just to find anybody who was successful and learn what they knew. And that way I could kind of find myself through that. So I found myself in a way through others. And I think that happens in a lot of things where you don't really know who you are until you know who you're not. And that's one of my themes. I find that puts me on track when I think that way. But I studied a lot of other traders and I found out how they made money. And slowly I found a few things that I liked and I picked them through time and added them to my strategy. And then I became kind of comfortable with what I had found that worked for me. And as time went on, I moved from futures during the day to stocks during the day, and then to stocks swing trading, and now stuff that I even hold for a few months. And I even jumped in crypto for a few years. And it's kind of evolved into a lot of different asset classes and timeframes, but it seems to be rooted in kind of the same strategies, even though the timeframes are different.
I think that so many new traders struggle with learning from other traders, trying to be like other traders, and they see other traders making money. You and I have experienced this, where you look at another trader and go, they're doing something right in front of you. You go and do the same thing and you don't make money. And it blew my mind. I'm going, why are they making money and I can't?
Right.
And you said that you picked a bunch of different things that you liked and then made your own. Talk to us about the specific things that you ended up liking and made your own.
Yeah, I will. First, the story. I sat next to a guy, and we both know the guy who was a fantastic trader back in Chicago. And I remember sitting next to him and thinking, it didn't do me a damn bit of good, honestly. I think I lost money when I sat next to him in terms of his big days. He would be really bullish and then flip bearish. And you can't do that unless you're inside the head of that trader and have the conviction to do the same move. So you can't really copy anybody in this business. And it seems like my parents would say, well, just do what that guy's doing. I thought, well, it seems easy, but it's not like that. So back to my edge and what the specifics behind it. I think stupid news is a big part of it. So that would be the market has a trend. I like the market to kind of determine what it wants to do. And a lot of times when it does do that, you'll get a headline that doesn't make a lot of sense. And it will contradict that trend. And a lot of times I like to buy into that. And it's kind of an art form as to where to enter. So I've kind of made little rules about better ways to enter. And there's many examples. I can give some simple examples to give people an idea. So when Tesla first came out, they had a big trend up and then they had battery fires because the batteries were too low and they were scraping on the ground. I thought that was some stupid news. A recent one would be, if you remember a while back, Alibaba did a Hong Kong listing and the stock did really well after. But recently, Congress was pushing all of these potential laws through that we were going to ban these Chinese companies from the US. And you saw that big delisting push. And they cracked all those stocks, about 20%, a bunch of them, JD, PDD, all the Chinese internet stocks. And I thought that was an example of stupid news because Alibaba did it and it went fine for them. Those stocks had started to trend up on their own. And now we're coming off 20, 30% on the fear that they might list in Hong Kong. And So to me, that doesn't change the fact that the uptrend was already started before that. So I bought into that, and that trade worked out for me. And it's just looking, you can do that on any time frame. And that's a lot of, that's probably the core of what I do. And then there's also things like when the market is really busy, like during the coronavirus outbreak, I'll be day trading more and just taking advantage of volatility. But when that goes away, which is most of the time, then I kind of go back to the stupid news type stuff. And that's not the only thing I do, but that's probably the major thing I do.
I want to stay on that for a moment because
Sure.
that's one thing. When I met you and I met Brent, you guys really opened my eyes to this. You guys are the best researchers I know. Coming into any number, it's like I just want to talk to you and Brent and just say what you guys think. And you really taught me something about stupid news. And I want you to explain to everybody, because this is one of those things where everybody's probably going, Anthony, what is he talking about? I don't get that. Explain to everybody specifically what that means when people say stupid news, and then how you use that as an edge in your trading.
Yeah, it means that there's something the market determines should go up or down, and it sets a trend. And you can do it against the trend, but I prefer the ones work a lot better with the trend. Like another example, I think examples can explain it even better. So
Yeah.
a couple of years ago when there was the Cambridge Analytica fiasco with Facebook, if you remember that, when they had the data that they sold, they drug Facebook in front of Congress. I believe they brought Twitter too, but I think it was just Facebook. And Twitter stock got hammered on that. And it was mostly a Facebook issue, but Twitter got grouped in. And that was, I think they took Twitter from, I'm thinking 40 down to 26 or something, and then back up through 40 and into the 50s at one point, I believe. So I thought that was a stupid news trade because it wasn't really about Twitter. And to go down that much on something like that when the stock market had already determined it was trending up, they had some good earnings reports. So it's always looking at things that I'm not trying to be smarter than the market and guess why something should be going up or down. I'm looking at, okay, the market has decided this. And I like it, especially when it's kind of in the middle of the trend and there's a lot of maybe technical levels to take out. And then we get that big pullback against the trend based on something, a CEO scandal, a bribery scandal, something, even the JP Morgan whale trade back in the day, we had that one, if you remember that one. There's been Lululemon with the see-through pants and the CEO saying it was the women's fault. That was another one. I mean, you get a lot of them in a short time frame, but you get probably 5 to 10 really big ones every year that are significant. If that explains it a little better.
It does. Let's go to the future side of things, because I remember one day,
Yeah.
I would say within the last year, I remember this one specifically because you talked to me about something that happened with the Fed. And I know that you and Brent, you guys talk a lot. You go into these data points or these meetings or any sort of headlines that are pretty much planned to come out, and you guys will then look at and see, okay, how's the market reacting to them? And then I remember you talking to me about, well, this happened, and it ended up where it was like that it didn't change much of anything, and that was like your trigger to get in. Explain maybe one of those things more on the future side.
Yeah. On the future side, so I'm trading mostly during the day. Sometimes I do swing trades, but there'll be little things during the day where maybe you have a bearish lean going into the morning for whatever reason, and then it just doesn't really want to go down. And it just feels like people are also thinking that way and they're short, and you can get hurt a lot on those days. But oftentimes what you'll get is that big blow off move up on something, just a random US China headline or something like that. And then when that blow off happens, it kind of releases the pressure and comes back into that range. And at that point, I'm a lot more comfortable selling it because I feel like, okay, I felt like everyone got blown out. I felt that pressure in the morning get relieved. And I didn't think that the reason it got relieved was anything substantial, but it was enough to blow out people who were short. And you'll see that a lot during the day when there's people jump on. So part of the reason I have a few news squawks I subscribe to, and I watch a lot of people on Twitter who break news. And the reason I do that is because I want to be able to line up the move that happened with the news. And a lot of times that I can see, okay, I know why we went down. I know why we went up. And I don't really think that was significant, but I see why we did it. We took out these stops. I see why people are buying. Now I feel more comfortable selling after when that fails. So a lot of that stuff is when I have my better trades, and it doesn't happen every day, but if I wait for that, I kind of get pulled in. So I'm kind of always watching. I like to tell my wife I'm always working and I'm never working because I want it to pull me in. I don't want to try to push it myself.
I love that. And talk to us about how you get to that point where you recognize it's stupid news, because it's one of those things where even where I know you very well and I'll look at some of these headlines or things and I think some of them are stupid, obviously, but I don't know how that translates into actually me getting into a trade. So walk us through how much of it is technical, how much of it is you doing homework prior to this news coming out to where you're like, okay, this is all coming into play now. It's forcing me to get in.
Right. I might give another example to explain it again, but I think it it's kind of a unique strategy that fits my brain. It's a little bit more of a right brain strategy. It's less of an analytical or quant strategy. It's hard to program, and that's why it always is going to work, because it's based on emotions and things that you can't predict. And I think when you can't predict something, I was reading about how machines are, we know they're taking over chess and Go and all these games, and humans are having a hard time because whenever a human being can study tons of patterns or data points for a whole lifetime, and a machine can also copy that, you're never going to beat that machine. But when you have more open world type examples of strategy and many different disciplines coming together, the machine has a hard time with those inputs, and humans can do better. So I'm thinking forward, this strategy makes sense because it's harder to pick off. So yeah. Back to the example again, there was one last year where the CGC was a marijuana stock, Canopy Growth. And it was widely rumored that Attorney General Jeff Sessions, who is gone now, was a tough on marijuana guy, and he was going to be leaving. And it was rumored for weeks. And then when it actually happened, marijuana stocks, which were already in a downtrend, had this massive rally, like 40 or 50%, because he left. And he was kind of a get him out of the way, and it'll be good. Well, the market had already determined that those stocks were going to get taken down, and they already had cracked. But I sold into that rally because, to me, that's stupid news. That has nothing to do with the trend. The trend has already been decided, and this has been flagged ahead of time. So that's an example of, again, and how do you find them? It's not easy. You don't find them by really looking hard. You kind of find them by getting up, paying attention. I look at the gainers and the losers lists. I keep an eye on the big stories that everyone kind of knows about, the big stocks. And I just kind of hang around and keep that going every day. And then I just look at the news. And when I see something really break out or have a trend, I just kind of put it on my list and I let it come to me. And it's a little more artistic that way. And it's a little harder to paint somebody an exact picture of how to do it. I also think that's why it works. And I also think it's not probably the strategy for everybody either.
No,
so hopefully that explains it.
Yeah, no, that totally explains it. And I mean, this is why I love always talking with you, is that you stay so true to yourself and to your strengths. And this is a strength of yours. I mean, this is something that it's not my strength, but just from learning from you, I've been able to take some of the things that you've taught me and help me with my edge and my trading in my little world. Now, I want to talk about how much of it is technical, because, you know, I know that you look at charts a lot as well. So I know that you're doing all of this research, but then you get to the point where then you look at charts. Talk to us about how the charts then help you with that stupid news edge.
Right. So real quick before that, I promise you that I run off the reservation and do stuff that's dumb. And I do it, you know, I get caught up in,
we all do.
Oh, let's try this strategy, or let's add this to the mix. And it's like, oh man, what are you doing? I think there's a place for trying new things, but that's a different topic. So can you repeat that real quick?
How do you use the charts? Yeah. How do the charts then come into play when you have this move?
Yeah, so it is important. And I think there's this debate, technical, fundamental, and I think there's no one way. There's a mix. It's always, the best trades are a mix. And so with these trades too, it's setting up. I do think the technicals are important, because I've had less success with the ones that are against the trend. Sometimes they work, but I let the market determine what way it wants to go, and then I react to the impulse or whatever happens. And so the charts are very important in that I can define my risk. I can look at a lower Bollinger Band entry. I can look at moving averages. I can see, man, if I can buy this with the trend in this dumb news, it should take out these double tops. I have a target. So absolutely, that is important to me. And I do look at it, and it would be harmful for me not to look at it. But it's never the only reason for the trade, because if I only have that reason for the trade, any adverse price movement and I'm losing it, I'm getting shaken out. Like, I'm not building that conviction, which is so important. Defining my risk, building conviction. If I can't do those things, I can't hold it.
Are you using a consistent set of technical analysis tools?
Yeah, I am, but I don't think, I'll tell you what I'm using, but I don't think it matters as long as you're sticking to similar stuff and that you are comfortable with what you're using. So I have Bollinger Bands, I have moving averages, 10 period, 20 period, 30, 50, 200. And I just kind of curve fit them to see what the market has been using. And kind of, it's just another thing to lean on for risk management, just kind of a marker in the road along the way as to where I might want to lean on something. But a lot of times that's just a small, important part of my trade. That's not really the determining factor. That's kind of the fine tuning.
As I always say, everybody, everything works sometimes, nothing works all the time. And with technicals, you just really have to find something that you really like and believe in, and then you just find a way to use them, as you said, to manage your risk. One trait that I think there's a couple of things I want to talk about. What I think that you have really good traits is, one is you have the ability, and we've talked about this, to hold winners as well as anybody I know. That is not one of my strongest points. And I've talked with you about this and how you're able to hold them for these long periods of time, where most people would be wanting to get out. You're great at holding them throughout. How did you get good at that?
Well, I think it's kind of my natural personality to want to do that. So, and I overdo that to the point where sometimes I let things come back, and it's, as you know, we're always fine tuning, and it's great when it works, and when it doesn't, you feel like an idiot. So that's part of it. I have to say that. But I think a huge part of that is conviction. When you do something, so I studied these stupid news trades, and I looked at 50 or 80 of them over the last few years. And I noticed that the ones that were with the trend, so trend is up, stupid news pushes it down, and then I have my targets. Those ones, I was buying them and then getting out and watching them go through the highs consistently and taking these little winners. And I realized that when I have the trend with me on those, they almost always go through and make a significant new high. So even though I knew that, I started holding longer, and I still struggle when I see I've made this money on one of these trades, and I want to lock this in, and it's really hard for me to hold them. But doing the research and looking back and seeing how this is how they usually act helped me start to hold them longer. And there's still more to do on that. But another thing too is I'll look at sentiment. If people hate something that's working out and it's all part of my strategy and it's very hated, I have a good idea that it's probably going to keep going. So I add other things like that in as well. But having that conviction, 2 or 3 things lined up, charts, past results, and then maybe people hating it or something like that, is like everyone's hating the stock market rally from the bottom. So it's a little maybe easier to hold if you believe in that.
Yeah, no, definitely. I've been definitely using that in my thinking as well, as I've been looking at, even on the intraday basis, when I get an area that's holding support and I see everybody talking bearish, I actually hold that trade longer if it starts working for me to the upside. Final thought for today. You have the amazing ability to really adapt, and I always look at you as like a path of least resistance guy. You'll do something that's working, you'll take it as far as you can, and then when it's not working, you're like, Anthony, this is what I'm doing now. Is that a skill? Is that something like, how do you transition from these different markets that you're trading? And even in some situations, I know that we talked about your edge in its entirety, but it's almost a different edge as you move on to what's working next.
Yeah, it is. And I think that's part of staying alive for decades in this business. And you know that too. It's just like I've hired a coach recently to help me with this. I've had to study my results. You know what the thing is it's just doing less. At some point, I'm actually having more success doing less. So getting up and just kind of observing. I have my news guy on in the background. I'm peeking at the chart. But when it's slow, I'm just trying not to be in there every day as much, and after I've ironed out what I want to do, kind of letting it come to me a little bit more. And that's been one thing I've worked on. Honestly, the real answer too is a lot of pain and suffering along the way, a lot of doing it the wrong way, a lot of boom and busts where I make a lot of money, I give it all back, I hold it too long. I can't tell you how many times, since I'm pretty curious to try new things, I've joined so many groups and tried so many strategies, and then done it with too much size and gotten beaten up and realized that it just pushes me closer to what I need to be doing. And I never want to say I'm not going to try different things, because there's always a big trade coming that is a little different than my normal trades, and I'm open to that. But it's really about learning your own disaster pattern and how to fight it off. And one of mine is getting really big when I like something. And then what happens is I can't hold it at all, and I end up getting out with a medium loser because I'm too big, and then I watch it go without me. So I've always done better with kind of a medium size for me. And it's just taking lumps, studying it, and knowing your own personality. Because if you're someone who is very risk, so the way I am is I get really aggressive and then I panic really quickly. So I'm on both sides. I can get really wild. So if I'm too big, I panic right away. And so I have to kind of balance that. And I'm lying to myself if I pretend like I can just handle all this heat with big size, because I really can't. So I have to adapt to that, or else I'm just stubbing my own toe.
Trading is a journey of oneself.
It
Boy,
really
do
is.
we learn so much about ourselves as traders. And even for me, with age, I'm allowing things to happen a little bit more. As before, earlier in my career, I tried to force a lot of things to happen. And I feel like now I have a stronger hand in the market because I do allow things to happen. Brad, you're the best. You're a great friend of mine. Tell everybody about your podcast because I listen to it all the time. I want everybody to go and check out your podcast. I know you do short little podcasts all the time. They're
Yeah.
awesome.
Thank you, Anthony. I appreciate it, and I feel the same way. My podcast it's called Trading Life Podcast, all one word, by Brad Jelinek, and it's on all the major platforms. I have a website as well, tradinglifepodcast.com. So you can find it on Spotify, Apple, or Overcast, wherever you want.
Cool, man. Well, thank you so much for joining me today, Brad.
You're welcome. Good to be here.
Good. Thank you. All right,
See you,
traders, hang tight. We'll be back in 30 seconds with my final thoughts.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Why trade futures with Tradestation? You can trade over 80 products from home, work, or on the go with a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at Tradestation.com.
Final thoughts for today, traders. Love my conversation with Brad. I've learned so much from him over the years. I highly recommend you go and check out his podcast. Now, let's take a look at the charts. The 10-year daily on Tradestation. I pulled this up because 10 years back on my radar. I talked about how I really haven't been trading the 10-year too much. I mean, just look at it. It's just this the slow grind higher. And for day traders that want volatility, a lot more action in the equity markets. But now that I'm starting to see the 10-year do what? Start to spike, start to see that Bollinger Band go up. So now, why is it on my radar? For number one, because we finally pushed through resistance, which was 139.23.5. I saw that on the daily close, multiple daily closes now above it, tells me that we could be headed to 140.12.5, and that area is going to be very important. Because if the top Bollinger Band gets taken out, takes out that last peak of 140.12.5, I think we could have a spike higher, and 10-year could really start to go. So I'll be looking to be a little bit more aggressive with longs. If it goes up there and fails there, and that top Bollinger Band starts to come back down, and we talked about getting boxed in, then I think we could see this area be playable for some resistance. So either way, the 10-year's back on my radar. This is my process. This is everything I'm looking at, and I think it's going to start to be a little bit more active. Now, let's take a look at the NASDAQ and the E-mini S&P. Let's pull up the NASDAQ first. So I've got the NASDAQ up here. Last week, I talked about how the NASDAQ Bollinger Band started to close back up. My indicators drew some lines. Remember, you can get my indicator for free at anthonycrudele.com. And NASDAQ's boxed in. Two-way action. We saw that a lot this week. Now, what I'm looking at going forward is, I remember I talk about this, I'm not trading the NASDAQ, but I use it as a great confirmation for trading the S&P. And it's been really difficult because the NASDAQ on the daily has just been in this runaway train while the S&P has been kind of boxed in. Now, when you look at this, just remember how this looks. NASDAQ's boxed in just above my pink level, which is 10,757. Let's pull up the E-mini S&P. It looks very similar. How am I using this for an edge? Well, because it's not always about finding the direction, right? If they were both going up and both Bollinger Bands were pointing up, taking out previous peaks, I'd only be looking at longs. But when I see this and they're both boxed in and they're both reacting to that pink level we'll talk about, very similar, then that to me is an edge. That means it's a two-way trade. Sometimes a choppy market can be a really good market for me. So when I see the NASDAQ and the S&P look very similar on the daily, I then take them down to the shorter term charts, which right now I'm using 1,000 tick. And I watch and how they're reacting to their levels. If the NASDAQ gets to a level first, because it's usually a little bit quicker, and then the S&P gets to its level and they both start to work together, that's a trade I'll either be more aggressive in or hold a little bit longer. So I'm really looking at both sides, a little bit more biased still to wanting to be long, but that's for different reasons, not necessarily because of the charts, because of the Fed. We've talked about that. But I love seeing the markets that are correlating look the same on a daily, then I take them down to the shorter term, apples to apples, and I use that for an edge in my trading. Remember, if you have any questions or comments, please put them down below. You could also follow me on Twitter at Anthony Crudele, and be sure to check out Instagram. Everything from things I'm doing with hair tips, workout tips, all sorts of fun stuff. So check out Instagram at Anthony C. Crudele. That's a wrap for today. See you next week.